Hello, everybody. Welcome to Thursday. The S&P 500 was down 3.5% today. We were up 9.5% yesterday. So having a drawdown on the second day, that's pretty common. Goes both ways. Get a big drop. Sometimes you get kind of a bounce that happens. There's no real news that was driving things per se, although, the only news that did come out that I saw about tariffs was really just about, the clarification that China's tariffs aren't 125%, like I thought yesterday. They're actually 125 added on to the 20 that was already there for a total of 145%, which isn't good news. Probably didn't help the market today either. We did get some good news on the CPI report. Came out, inflation at lower than expected. Actually, lowest inflation we've had for a little while. Now, the Fed doesn't look as much at the CPI report, and it just got blown away by all the other things that are happening. And obviously, the market is really focused on tariffs. And so, again, we're waiting for news about, good news about what would happen with tariffs and lowering those tariffs or settling those tariffs. You can't have 145% tariff with China, and they have an 84% tariff on our goods going in there. That's not going to work. And that will be a really disastrous situation altogether, probably for both countries. And China's actually, been struggling. So somebody's going to blink here someplace. And I bet that's the next thing that really does happen and moves the market. Could be today, could be tomorrow, could be next month. That's kind of how these things go. You never know what's going on behind closed doors. And so that's the main driver that we're looking at. What's happening? Is Congress going to do anything? What's Trump going to do? The Fed, what are they doing? What's happening in the courts? And so again, we'll just keep watching. And again, just so I reiterate what I said yesterday, for the clients that are out there, we had a 63% exposure across the entire practice to stock market on average. Average client, basically we dropped that down to 23%. We kept the stuff that was highly appreciated. Didn't think this market yet warranted taking large capital gains. And then yesterday with the pause, again, we're looking for good news. So about 90-day pause is good news. We decided to, move back in. We're up to 33% as far as that goes. So roughly half of what we normally have for exposure. The rest is in these T-bills, ultra short-term bonds, short-term T-bill treasuries, that type of stuff. And so that's where we're at. Now, one of the things that did come around today was the realization that the tariffs as they sit right now are actually higher than they were after Liberation Day. So if you remember that big board, and at that time the tariffs on China were 34%, which was obviously quite high, but it was 22.7% net tariff. So if you looked at each country, how much they import and what their import tariff was, the net tariff was going to be 22.7. We've had this pause. We've come, so Vietnam went from 49 to 10%, so that looks good. But we've raised the tariff so much on China that the net tariff's actually higher than it was. It's 27% now. And so, again, I think the next thing that will happen will China coming back down into something reasonable. Maybe they're at 25% or whatever it might be. That would drop that net tariff down to a more reasonable level, or at least be below where we were on Liberation Day, which caused a $6 trillion market rout. So, let's see what happens here next as far as that goes. I think today is kind of on brand. This is the way the market works in general. We'll see if there's more follow through coming forward, what happens as far as that goes. So, but again, we're watching for this news to happen. So look forward to being able to see everybody at the show tomorrow. If you'd like to join us, it's 12:15 to 1 on Pacific Standard Time on YouTube's Talk Money with Tom. You can watch the show at that time, and you can watch and actually ask questions live if you'd like. But anyway, look forward to seeing you then. Thank you very much.